Everybody knows what time it is. It is the Wolfer Power Hour. I apologize to everybody that like follows me on Twitter. For some reason, dude, like this is super annoying to me. But it does not show that I'm like live on Twitter. It gives you the link to the broadcast, but you have to click on the link now. I don't know what Twitter is doing, but they are messing my stuff up because like it used to show the video and like people would engage with it, right? You know, and now they don't show it anymore. It's really odd. And, you know, I apologize for anybody that follows me on Twitter because it's like not alerting people, man. It's kind of, it's crazy. But if you are here from Twitter, scroll up and hit the follow button. And again, I apologize that it's not actually showing the videos and it's, I don't know what to do. I could text Elon and see about like what's going on with the, what's going on with the algorithm, Elon. So if you're here from Twitter, you know, like I said, scroll up, hit the follow button. We do this every day. We do, you know, the technical analysis most of the time, mostly every day, right? I can't say that I do it every single day. Like Ray Shrummer would tell you. I can't say that I do it every single day. I had to take a day off yesterday because I was actually up at Verified Investing. And if you know anything about me, I'm a, you know, pro trader on verifiedinvesting.com. And I actually had to go up there and film, right, for this company right here. I had to go up there and film for my training where I show people how to trade gold, right? So if you're interested in that, I mean, I'll let people know whenever it comes out or whatever, but you know, that's not the point of this stream, but that's why I was not streaming yesterday. Okay. So in any case, you are here for the levels. You are here for the trades. You are here for the hopeful games, right? And you are here for the education. So I am switching up the way that I do streams now. I am teaching, okay? I am trying to educate people because I don't just want people to just like follow my trades blindly just because they're like, oh yeah, Drew makes money, whatever, on some of his trades, and then you just follow him blindly. I want you to understand why, okay? And I want you to understand like what it is that makes me get into these trades, right? Like what is it, Drew, that makes you get into this trade? So that's why I'm switching it up to where I'm like teaching people how to actually go out and identify these setups for themselves and understand why the market is going the way that it's going, right? And then be able to predict it and time it and things of that sort. And that's why I have an 82% win rate in the verified investing community inside of our gold trading, where I teach people exactly that, right? And so I'm going to start teaching people exactly that on the streams, right? And this is all free to you. You know, this costs you nothing except for your time, which time is very valuable. And I realize that that is, it's a commitment, man. But I want people to understand why we do the things that we do, right? So let's just get straight into it. I actually called the top on gold inside of the verified investing community at $3,050, right? Now, if you want to understand how I called the top on gold inside of the verified investing community, I'm going to show you exactly how. And it's through this tool, this handy dandy tool that you will be able to use, and you will be able to call the tops and the bottoms of the market if you understand how to use this one tool. And I'm going to explain it to you in a very fundamental and easy way, right? This is called the trend-based Fibonacci tool. And I'm going to show you how you use it, okay? Now, say this is the low on gold. This is just a quick tutorial. Say that this is the low on gold, and then this is the high on gold. Then your third click is going to be where that next low is. And that is going to tell you where gold could be going in the future. So the first, you know, key level is going to be that 1.0 full Fibonacci retrace and the 1.618 further than that. Now, I already have this pulled up on my charts, so I'm going to show you exactly what those trend-based fibs show you, because that is what helped me to call the top on gold. And for that, we are going to go to the daily chart. Now, let's zoom out really quick and I'll show you exactly what I'm talking about. Boom, 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 and bam. So this is the micro trend-based fib, right? That told us that the top on gold was going to be at about $3,050. Why? Because we set a new all-time high here. We pulled back to this level. We set another new all-time high and we pulled back to this level. So I pulled that trend-based fib And it told me that the top was going to be somewhere around $3,040 from a micro perspective. Now, if you couple that with the actual trend-based fib that I pulled from all the way back in 2018's low to the high of 2020 to the ultimate low of 2022, it told you right here that the top on gold was going to be about $3,054. So right in between that is $3,050. And that is exactly where it went. It went and hit that 1.618 and bam, now it's starting to pull back from it. And that is exactly how I called the top on gold, told everybody to enter this short position inside of that gold trading group, and how we are making money off of that right now. So that is exactly how you are going to be able to call the tops on markets. That's just a really quick tutorial explaining it in like a super simple way. And this was a really good example on gold, right? And I'm not saying that this is the top on gold. I'm saying that this is an interim top on gold, right? So now that you understand how to do that, you can reverse engineer that, okay? What do I mean by that? This is how you can, potentially call the bottom, okay? So let's go back. All right, so now if you want to understand how to figure out where the potential bottom could be after a bull run, I'm going to show you exactly how to do that too with the trend-based Fibonacci tool that almost no one talks about. So if you want to be able to call the bottoms, this is exactly how you're going to be able to do it, right? You go over here and you go to your trend-based Fibonacci tool. You pull it from the high to the ultimate low, which is, somewhere in there. And then you pull it to the ultimate high. And then it tells you where that bottom could be. Right here, it's telling you that the first potential bottom could be right here at about $68,000. The second potential bottom could be at about $57,000. And the ultimate bottom is going to be down here at about $25,000, where you will probably never pull back further from this. This is the 1.618 Fibonacci, right? My guess is it's probably going to be somewhere in this range right here. You usually see it go to about the 0.786 in between there and the 1.0. So somewhere in the $56,000 to $69,000 range is going to be where your bottom comes in on this. And if it honestly gets to that previous all-time high right here, this is probably a really good place to start buying. So that's how you can kind of figure out where the bottom could be. And I can show you even further than that if you want me to, right? Let me delete this. Actually, let's leave that. Potential. Call the bottom after you have reached like an all-time high in price discovery mode. And I'm going to show you exactly how to do that. And hopefully you'll learn from this and kind of understand exactly what I'm talking about. This is called the trend-based Fibonacci tool, and we're just going to jump right into it, right? So all you do is you go back to the previous all-time high, right? Which is right around there. You pull it to that ultimate low that came after that high, and then you just pull it right back up to that previous all-time high, or the new all-time high right here. And it'll tell you where those potential bottoms can be, right? So here's our ultimate high, right? And this one isn't working as well because, this is whenever crypto really, really tanked and they started doing, some serious work on crypto. This was called Operation Choke Point. So it actually reached past the full extension point. But as you can see, that extension point then acted as a resistance and then acted as a support, boom. And then we blasted off, obviously, to our new all-time highs. So this works probably 90% of the time whenever there's not really something crazy happening in the markets, like what we saw back during the Biden administration, which was Operation Choke Point, right around here in about 2022. And that was like one of the most extended bear markets we'd ever seen. So this is going to give you your key levels where you're going to see resistance, support, resistance, and support, right? And where you could be going potentially from there. Let's see if this does any better. Hold on. Let me get this off the screen. Okay. Let's pull it from here. Doesn't get much better than that. 1.618 retracement, man. It's crazy. It's crazy how it works out like that. I am going to film a quick short tutorial video on this because that's epic. That's epic. So just bear with me. It's going to be awkward if you're watching this. Okay. So this is exactly how you call the bottom on a market. You take the trend-based Fibonacci tool and you pull it from a high to the ultimate low to the next ultimate high, and it is going to give you your price target somewhere on the 1.0 to 1.618 range of that trend-based Fibonacci tool. And I'm going to show you exactly how to do it right here. Come right up here, take your trend-based Fibonacci tool, take your high, pull it to your low, right? And this, we'll call this the ultimate low, bam, and then pull it to your ultimate high, boom. And look at that, almost a perfect retracement to the 1.618 Fibonacci. Boom, that was your low. You came up here, bam, you used this as resistance, this is resistance. You finally flipped it, used it as support, and then we legged our way up, and look where we are now. Massive, massive uptrend, massive all-time highs, and that is essentially how you are going to be able to call the bottom on a market whenever it is set new all-time highs, especially in a downward trending market. This is incredibly valuable, right? Okay. We're going to drop that on the channel, baby. Let's see if this worked up here. Let's see if this works up here. Where's my ultimate low? I'm just going to zoom in. I love the trend-based fibs, man. Dude, look at this. Holy crap. How do you argue with this stuff, man? How do you argue with this stuff? It's tough to argue with it. That's all I'm saying. It's tough to argue with it. 1.618 retrace. Now, obviously, I don't think this one is probably our ultimate one. It's probably going to be more like this, right? Your previous all-time high, pulling it down to your low, and then pulling it to your ultimate high. 1.618 retrace, 70K. I've been talking about 74K, 70K for quite a while. This is probably where we're going to, this could be the bottom right here in the 70 to 75K range is my opinion. This could be the bottom on Bitcoin, and boom, blast off. And then obviously you know how to, measure the new potential top, right? You take the low to the high to that low, and we'll just do it, right? Here's the low to the ultimate high. Boom. And then let's say that the low is, $70,000, right? Where could that take us on Bitcoin? Probably like 150 grand. 167. Yeah. I mean, that would be epic, right? Prediction. Okay. Yeah. Woo. 167 on Bitcoin. I think everybody be having fun. I think we'd all be dancing. I did not close my gold trade. Nope. It hit the 3K range. I was filming, so I did not get to close my trade at 3K. I still think that it's got further downside, to be honest with you. So we'll see. So it depends. It depends. Like, are you looking for macro trends? Or are you looking for, uptrends? So for like something like this, hopefully you kind of hopefully I kind of answered that question here. But, you've got your ultimate low after your previous all-time high, right? That's your ultimate low. You've got your new all-time high, and then you just measure it to wherever it bottoms out, like that ultimate low, and you catch your bounce. So for example, like right now, this is the ultimate low, right? But I do think that we have further downside that we're going to talk about here in just a second. And I mean, that would take you up to 175K Bitcoin if we bounce from here. 136 is the 1.0. 174,000 is the kind of like real target on that, and then even further than that, you're looking at almost $250,000 Bitcoin. I mean, it's crazy, man. So why do I think that we have further downside from here? Well, Buamio, I don't use a tool, right? My tool is my brain, right? So to understand where my stop loss is going to be set, yeah, I mean, you can use the fibs, but you're going to have to ultimately decide it yourself, right? So, okay, so say, for example, you are, let's go. So this is the trade that I'm in right now. Where's my short trade at? Is this it? Yeah, 85K. Why is it all the way over here, though? Anyways, I shorted at 85K. Where's the 85K range? Probably shorted like over here. Yeah, my entry is at like exactly 85K here. So I would set my stop loss outside of those previous highs, right? Especially whenever we're in a downtrend that's setting lower highs and lower lows, right? So what do I mean by downtrend setting lower highs and lower lows? Well, you can see it right here. Let's take this magnet tool off. High, low, right? Lower high, lower low, lower high, lower low, lower high. If we come down here, it's going to be a lower low at about $75,000, right? So if we break this high, I know that we're breaking market structure, right? After we bounce here, because we would have a lower low and then we would have a higher high, right? So that's why I would place my stop loss out of here, because I know that probabilities are telling me that we might be going up because we're breaking this downward market structure, right? Once you get outside of that. So, and you can also use trend channels, right? So I'm pretty sure that I have a parallel here with the Fibonacci already drawn, right? And that parallel is showing me that potentially I'm going to take the fib off, right? And then I'm also going to take my short position off so you can see this a little bit better. But this is telling me that like that's where your stop loss needs to be, is somewhere outside of that, right? And then if we break down outside of this, this is now going to be resistance, right? So if you're shorting here, right? Say you're shorting there on the break of this, then you would want to place your stop loss above those previous swing highs and outside of those moving averages. Boom. See what I'm saying? That's it. That's it. That's it. That's that. Now, if we look at this, we are banging up on this 200 moving average a lot right now, okay? And that does not favor upside when you keep banging up against it. This is favoring downside, right? So let me show you this. I think this, what was it, on the 4-hour chart? Or was it on the daily chart? I don't remember. Maybe it was on the daily. Okay, so we're not liking this 200 moving average, right? We're kind of like staying under it on the daily chart, right? So what do I mean by it doesn't favor upside, right? It favors downside. Well, the more that you bang on a level, the less likely it is to hold up, right? And then as you can see, boom, now it's resistance, right? Now the same can be said, the more that you bang up on this as resistance, the more likely it is to break up, right? And reclaim that level. I'm not saying that it won't. I'm just saying from a macro perspective, this is for sure a bear flag, right? With a price target of, you know, if you break here, price $72,000, $71,000, right? But secondarily, the more that you bang up against this, the higher likelihood it is to break out. But is it going to break out after you banged on it as support for that long and then flipped it? Probably not. It's looking more like downside. But again, like I said, you reclaim this here, and you get a confirmation candle. It's looking like pretty decent upside potential, right? So let's go to the hourly chart and I'll show you even more. As you can see, we kind of kissed the 200. We kind of kissed the 200. Then we smashed into it. We kissed it again. We kissed it again. And we're getting closer to it almost like every single time, right? So if we don't keep bouncing from it, like you're going to come under it and start using it as resistance. See what I'm saying? So the more that you bang up on this thing is the less likely it is to continue being support, right? And then it will get flipped, bam, to resistance. And then you could be potentially heading downwards, right? Now, if we also look at our FRVP, you can see what I'm talking about. So as you can see, our FRVP, we're not liking this this point of control. The more that you ride this thing, man, when you come from above it, the more that you ride this thing, the more likely it is to break down. And I'm going to show you what I mean by that right here with another pretty key example, right? So this is essentially how you're going to know if a level is going to hold up, right? The more that you bang on a level like this, like on the FRVP, which is a fixed range volume profile that tells you what's the fair value of an asset when it's inside of a range, right? Whenever you come up above it and then you come back down to this yellow line, which is the point of control, this is the value area high. This is a massive level of resistance. Once you come back down to it and you start riding this, it's much more likely to break down and want to head towards the bottom end of that range, which is the value area low. And again, right here, we broke up above it, and now we're riding it again, very similar to what we did over here. And then you saw what happened over here, boom, downside, right? And if you really want to see a pretty good example of this, we can go to the FRVPs on a much larger time frame, which is this one right here, where we were setting new all-time highs and things of that sort. And as you can see, the more that you ride this, bam, the more likely it is to come down. And in the same sense, the more that you ride it whenever you come from under it, the more likely it is to break up. So right here, we rode up to it. We rode it, boom, broke up to the value area high. And then you can see the opposite or inverse of that much more clearly over here, where we set new all-time highs. We got outside of the value area high, and then we came back down into it. We rode this point of control for quite a while, broke down all of the support there, and then bam, massive, massive fall and sell off. So that's kind of how you can, this is what's called the time value of a level. And the more that you break down on this and hit on this level, the more likely it is to just break down, or if you're coming from under it, break up, right? That's called the time value of a level. So in my opinion, you know, we're trying to regain these moving averages right here. You can see the 50s curling down. We're trying to regain it. The 200 and the 100, which is the green line, is the 200. The red is the 100, is curling up. The more likely you are to watch this 50 curl under the 200 and the 100. It's about to cross actually right now. That is what's called a death cross, and that is usually hinting at downside. So as you can see, we hit that, right? Now, did that death cross get front run? Yes. And is the 50 starting to curl up? Yes, it's starting to curl up. But our price has to stay above this 50 in order for that 50 to continue curling upwards, right? So if you look at, you know, what's going on the stochastics and things of that sort, the stochastics coming up here towards, you know, overbought territory. So you can get a couple of more candles here. And then you're also getting a signal line crossover at the 50 line on the RSI. But RSI has been struggling here at the 50 line. And every time it regains it, boom, just gets dropped back down. Boom, drop back down. Does that happen here? You know, it definitely could. Weekends are historically low volume, and it's hard to trade on weekends unless you're already in a trade. So I'm not necessarily telling people like, yo, get in a trade right now and short or go long. But, you know, that's essentially what we're seeing on it, right? So, again, the more you hit on this point of control after coming from above it here, like the more likely it is to break down. And the more likely this 200 is to break down, the more you bang on it, right? So just understand that, you know, that is something that can absolutely happen. Does anybody have any altcoins that they want me to look at? Let me know in the comments section, and we'll check it all out. So let's look at the descending triangle that we're trying to break out of right now. Okay. So here's the descending triangle. We can actually pull this up. So here's your descending triangle, right? These favor downside. Why? Because they're setting lower highs. And as you can see, we're kind of bear flagging here, right? Boom. So it's not looking too hot. You're going to have to get above this $84,500 level to think about any upside at this point, in my opinion, right? And Furthermore, you've got your value area high at 84.8, so you might get a pump up to it, right? And say you take this level out, and then you could get a subsequent rejection almost immediately, and then boom, downside, right? Here's the downside target on that. It's about $81,000, okay? And that would take us down to almost these previous lows. And if you take out those previous lows, it's going to be the doorway to these lows and then the doorway to these lows, right? So in my opinion, downtrend is still in play. We got to start taking out these previous highs in order for the downtrend to no longer be in play, which those previous highs are going to be right here at the $92.5 and $95,000 range. So you got a lot of work to do, but where you need to start is at 84.5. You got to take out this like lower high right here. Once you start taking that out, that's where you're looking a lot better at like 87.5, I believe is, yeah, almost exactly 87.5. Yeah, we'll check out XRP. G Wood Drums in the house. Let's check it out. As it sits right now, there's not really much going on in terms of trades on Bitcoin. Look, you'd be in the money right here. You definitely killed it on this trade that I gave you. And I believe this was 2 days ago that I gave this trade. Boom, you'd have killed it, hit that 0.618, taken profits, flipped along. You could have rode it up to the 0.5 or even further, right around there, right? And that's that. As it sits right now, there's two potential trades. You've taken this trade already, right, at the 0.618 for a long. Everything is going to depend on Bitcoin. If Bitcoin goes down, you're going to want to be shorting this under this 0.618. So what you're going to see is if Bitcoin starts going down, you're probably going to see this, right? And this is where you would enter that short position. Now, if Bitcoin goes up, then you would want to enter this right here. Now, there's a certain thing called a schlong, right? And it's Saturday, so I'm comfortable whipping my schlong out on a Saturday, It's a short and long position at the same time. And you could take it at the same price. You could say, hey, I'm going to take a long position. I'm going to take a short position. And then let the market decide where it goes, right? Set your stop loss here for the long. Set your stop loss here for the short. Now, there is what's called a max pain scenario on that. Say that your stop loss is here for your short, and you take your long and short here. Say that Bitcoin goes down just a little bit. It stops you out of your short, and then Bitcoin pumps up and then sets a lower high, and it stops you out of both positions. That's called maximum pain. So that's the one thing I want to tell people when you are essentially straddling a price. That's what they call it in the options market. If you're straddling a price, there is a max pain scenario where that can happen, where you're literally, and we'll just set it up, right? Let me take this off. Set up the short. Now, this is going to be non-directional trading at its finest, but there are risks to it. What non-directional trading means is that you are not choosing a direction. You're going to let the asset choose which way it goes. And this happens in capitulating markets that are trending sideways, right? You may choose at a certain level, say the 0.618 golden pocket on a Fibonacci, to go long and to go short at the same time, and then let the market decide where it's going to go. Now, you would obviously set your stop loss on your short position up here outside of this previous Fibonacci level, the 0.5. And then on your long, you would not want to be in this if it blasts past this 0.618. So obviously you would set your stop loss down here, but there is what is called a max pain scenario, right? There's two ways that this can play out. One, the market comes down here and then it bounces and it goes up here to your profit target, stops out your short position, and you make money, right? But then there's the secondary scenario where that doesn't happen, okay? And this is what is called max pain. and say you take a long and a short at this level, and one of two things happens. One, it comes down here and then reverses, stopping you out of your long, and then decides to pump and then stops you out of your short. And then you lose money on both trades. Or say it comes up here, hits the 0.382, and then decides to reverse and stops you out yet again of both positions before it actually takes its move. So you need to make sure that this is a very key and critical level whenever you're setting your stop losses, that you're setting your stop losses in the right places. That way you don't see that max pain scenario where you get stopped out of both sides of your trade. That is called a straddle or a schlong, a short and long at the same time, whenever you are trying to be non-directional on your trade and stop out of the losing position once the asset decides which way it's going to go. So that's always my disclaimer that I tell people, like, even on, there is no, hey, I cannot lose on this trade unless like you're just already in profit up here and then you set your stop loss in profit. Okay, I get that, right? But there's no trade that you can take that is like a non-loser. There's always, just one person sends in a typo trade, stops you out on both sides. Yeah, exactly, bro. Like, just things can happen to where, you know, you can get stopped out, right? Boom. And then bam, they front run the 0.786. They stop people out because they're below these previous lows and they're setting their stop losses just below these previous highs. And then right before that big candle, and then boom. So yeah, I mean, and if you think about it, this is a pretty good place to enter a long here because this is a fair value gap. So, you know, like, this is a fair value gap. It's not the best fair value gap because I get it. Like, this is a red candle over here. You'd like to see 3 green candles in a row. But that's, I mean, that is a fair value gap for sure. It's just not the best looking one, right? This is your gap essentially right there. And look where you came. Boom, right to the bottom of that gap. See what happens, man. Can't guarantee anything on XRP. Obviously, do your own research, figure it out, and trade responsibly. Trade responsibly. Let's look at Cardano. Yeah, you never got this long position. You'd be killing it on the short. You would be killing it on the short right now. Boom, you would not have gotten stopped out. Like I said, that's why you set your stop losses above these previous swing highs, right? Because it front ran those swing highs, made a nice little swing failure pattern here. Boom, bam, right? Pretty simple. And honestly, like, if you want to know what a swing failure pattern is, I'll show you exactly what it is. So this is going to be one of the most critical things, literally one of the most critical things whenever you're setting your stop losses. I have a lot of people ask me about where do you set stop losses and why. Well, I'm going to show you exactly where to set your stop loss and why right now. So essentially, we entered a short on Cardano right here, right? And we set our stop loss outside of these previous swing highs, right? And the reason why we set them outside of those previous swing highs is because we know if we go above those swing highs, that is a break in market structure that is favoring upside. And we would probably then want to see it come back down. And then we would enter a long position here, stopping us out of this short, right? Now, this is what is called a swing failure pattern. And this is how you can kind of be, you know, pretty confident in your analysis of, hey, is this actually going to continue going down, right? Should I enter this position here? Once you saw this high come up and not take out the close of this candle right here, which is the highest candle close over here on this kind of swing high pattern, and you come up here and you don't close a candle above this level, that is what is called a swing failure pattern. And that swing failure pattern is going to tell you that there is further downside to come and that this short position was a great position to be in, right? Obviously make pretty decent money on the short position if you're in it right now. Because if you look, let's see, what's the profit on this, right? Yeah, I mean, you're already in a pretty significant amount of profit and you're targeting below these swing lows. You could even target these swing lows right here. I mean, that's a pretty darn good trade. And we gave that trade live. Does XRP have a wedge? I mean, we can check it out. Kind of, yeah. I mean, you could say it's a wedge, you know. Whoops, that's the wrong tool. I mean, not really, no. This is more of a downward sloping trend channel. I would say that this is actually more of a parallel channel, and I'll show you what I'm talking about. So see how that's like more of a parallel channel? These favor upside though. I mean, if you break out of this and you reclaim this 0.5 fib right here, I mean, this is a good place to be in, barring, you know, Bitcoin actually pumping, right? Because you would then be reclaiming the 100 and the 50 moving average. You come down here, you break out of this parallel channel, boom, you bounce here, you enter a long, bam, right? So that's another thing I would be looking at. But again, if Bitcoin's going down, that is not going to happen. This is the position you want to be in. If Bitcoin's going up, yeah, absolutely. Enter on the back test of this, boom, and you are targeting upside all the way up to right about here, right? The 0.236. That's what I would be looking at right now on XRP. Does anybody else have any? Yeah, no problem, man. Perfect. Glad to hear it. Let's look at some Solana. Yeah, so technically you're still in this short on Solana. You would have made money on this long too. That was good. That was a nice long. We can delete that. Technically you're still in this short. You have not been stopped out yet. You're targeting some serious downside though. Targeting these lows. So if Bitcoin goes down, right? Solana's probably going to go down here, right? But if Bitcoin goes up, Solana's probably going to come up to about this 0.5 fib, which is right up here near these swing highs, right? You do have a nice little range here that you're trading in between, which is in between this $121 range and the 137 range. I mean, you could take a lot of different scalps here, right? Buy back here, boom. You short it again, boom. Write it down here. Take a long here, boom, right? I mean, this is range trading 101. You know, this is a nice little range, man. Boom, boom, right? So, I mean, this is a nice little range on Solana, to be honest with you. And if you want, we can do the FRVP on it and see what the real deal Holyfield is. Let's check it. So this is where we lost that level. Call it right there. Where's my FRVP? Oops. Where's my FRVP? Oh, it's right down here. Yeah, look at that. You're bouncing right off of the value area high, came back down to the point of control. Can you reclaim the value area high? I mean, we'll see. You know, we'll see. On Solana, you got to get above 137. You got to get above 137.79, and then it's upside. If you get below, I don't know, 127, you're looking at some downside. I don't know if I would be trading Solana right here. I mean, you've got an upward sloping trend line, that's for sure. But here's the bad news. Well, no, this is good news, actually. So Solana is in what we would call an ascending triangle, right? I mean, this is bullish for Solana. What the ascending triangle effectively does is it shows you this. It's a bullish pattern. See, resistance, you're setting the same highs and you're setting higher lows. That is an ascending triangle. That's exactly what you're seeing on Solana right now, right? It's a bullish pattern. So, I mean, you might not even want to be in this short. But again, this is really, dude, this is really going to depend on what Bitcoin decides to do. Because as soon as you break outside of this level, that's broken, right? So if you hit this 0.236, that's why I'm saying 127, That's your shorting level right here. So right here, this is a no trade zone. Right here, you break above this, that's a long trade. Right here, you break below this, boom, that's a short trade. That's all day. Kind of tells you what's going on, right? S&P. We can check out the SPX. It's closed right now, but you know, whatever. So we had a massive, massive dump, as you can see, right? So you have reclaimed the 50, right? And you're trying to reclaim the 100 right now. So my bias is that if you do get above this and you back test it, that's where you long, and you start targeting at least the 0.5 where that 200 moving average on the hour is going to intersect. And if you can get through that, and even if you come up here and you know, come back down, that's where you start targeting the 0.618, right? So let's just set that trade up, right? Come up here, boom, targeting this at the very least. Pretty cut and dry trade, man. Drop your stop loss below these previous swing lows, because that's where you know you don't want to be in the trade anymore. If you want to be super safe about it, you drop it below the ultimate lows and you target that 0.618 for a 1.5 risk to reward. But I would be more, that's like more of a swing trade. I would be targeting the 0.786 and these previous kind of like swing highs on the pullback. Boom, swing high, boom, swing high, right? See what I'm saying? That'd give you like a 2x risk to reward on this. But, you know, in the interim, this is what you would probably be targeting. 0.5. Bam. 2.6x risk to reward ratio. So it really depends. Are you a scalp trader or are you a swing trader? Because if you're a scalp trader, that's your trade. If you're a swing trader, this is your trade, right? So it just really depends on what your strategy is and like how much you want to watch the charts. But again, I mean, if you break below this, say you get a rejection at this 100 moving average, right? You get a rejection at this moving average, 100, and it just comes back down, bearishly backtest it. That's where you short this bad boy. And then you target further lows, right? So I'll show you where the further lows will be. You'd be targeting these lows right here, right? Bam. Probably have like a 3x risk to reward on this. Yeah, almost 3x. If you set it outside of those, you're going to have a way higher risk to reward. Because then, you know, like if you reclaim this 0.236 level right here and you reclaim the 50 and the 100 moving average, it's probably looking like upside, and you're going to want to be more like in this trade, right? So that's the S&P in a nutshell for everybody. All right, let's see if we can look at XRP, Cardano, Solana. What was the other one that I wanted to look at? H-bar, maybe? So here's an example of the schlong actually playing out, right? You enter the short and the long here. It comes down. It does not stop you out of your short, but it comes out and stops you out of your long, right? Now you're in profit on your short, but it's starting to reverse, right? It's starting to reverse. So like, or you're not stopped out. My bad. You're stopped out of your short up here. You are not stopped out of your long. And this is where if it starts to reverse, boom, that's where you start to actually take profits and make money. Now, my bias would have been, I probably would have just, you know, I honestly probably wouldn't have schlonged this, even though I, you know, gave people that trade. I did not take that trade. Why? Because whenever you're in these choppy markets like this, that's what happens, man. You get stopped out due to the volatility. And, you know, Bitcoin is going to choose its direction. And you might not want to be in those trades whenever Bitcoin chooses that direction. So as you can see, you got stopped out on that one. As you can see, You have not gotten stopped out on this one, but you've come close 1, 2, 3, 4 times. That is the inherent risk of taking shorts and longs at the same time, right? Max pain scenario, that is the risk, okay? So as you can see, you would be targeting probably the 0.618. If Bitcoin decides to start pumping and you take out all these moving averages, right? Let's take this short and long position off of here. This is what you want to see. You're below the 50, you're below the 100, you're below the 200. That's a bearish moving average formation. The 200 being above the 100, being above the 50, being above the 21, being above the 9. That's super bearish moving average formation, right? Now, are these about to start curling? As you can see, the 200 starting to curl, the 100 starting to curl, the 50 was starting to curl, but obviously we got another downturn. But if this 50 curls up and it starts going above the 100 and the 200, that's where you're going to want to be in this long position, right? Boom, right? So ultimately, Bitcoin's going to decide that, right? It's not going to be anything else. Bitcoin is going to be the one that decides that. Let's look at what were the other ones we looked at the other day? I don't remember. Let's look at Link. Yeah, so I mean, this is actually a time where the schlong would have played out, right? So you short and long right here. Boom, you hit your profit target. You're good to go, right? You stopped out of your short here. You never even came close to stopping out of your long. You hit your profit target on the long. Boom. Yeah, did you take half of the profit that you would have taken if you would have, had the long open? Yes. But you also had like inherently less risk because either way it moved, you were looking to make money, right? And this was before the weekend, right? This played out before the weekend, which is when you don't want to be in a schlong position or a straddle, right? So yeah, Link's looking good. It bounced off of the 0.2382. It's gained all the moving averages. I mean, it could be coming up here to $15, 15.35, right? And it is in an uptrend now, right? Micro uptrend. Low, higher, high, higher low, higher high, higher low, higher high, higher low. Do you set a higher high at the 0.618 and start moving your way up to 1631? You definitely could. You definitely could. You got to watch out for what Bitcoin's going to do there, in my opinion. Okay. So yeah, right now you're in a, if you would have been paying attention, you would be in a schlong position right now and you would be non-directional. You would have entered on this back test right here, right? Which is where, and your stop loss would not have gotten hit. And then you would have came up here, got a rejection, and you probably honestly wouldn't have entered this, right? Even though you got sucked back down into this, you probably wouldn't have entered this, but let's say that you did. If this thing keeps riding this down, then you're definitely going to get stopped out of your long and you'll still be in your short. So that's good news. And so long as this doesn't rip up here and then dump, you're not going to get anything bad happening to you. There's two bad scenarios that can happen. One is, say, this right here. Say you come down and you ride this channel down and you ride it down here and you stop out of your short or your long, and then it just bounces and reverses, and then it's going to stop you out of your short, right? Or there's the secondary scenario where you get your bounce here from the 0.236, you move up, and then you reverse immediately, right? And come back down, retest this again, right? Not saying that's going to happen, but I'm saying this is favoring more long right now because you have double bottomed here and you have now reclaimed this. You're probably going to need a retest here to confirm the long, in my opinion. But if you get below this, this is short city. If you come back and you bounce from this, that's long city. That's Sui in a nutshell. So hopefully that's helpful to everybody, man. I mean, the markets are super, super boring right now. I totally get it. Like that's Saturdays and Sundays on crypto though. That's Saturdays and Sundays on crypto. Do we go down? Do we go up? Right? Probably set my stop loss at break even so that I don't lose it. There's no way I can lose money. I entered my short at $85,000. Obviously, I'm targeting some serious lows. I think my first take profit's at 80K. My second take profit's at, I believe, 78, right? Which is where these previous lows were right here. That's my second take profit. And then my third take profit is obviously at the previous all-time high, which is at about 74K. And then that's it. I think that makes me like, if all those levels hit, I mean, it makes me $9,000 maybe on like a $9,000 position. So that's not a bad risk to reward, especially knowing that I'm not risking anything because I've got my stop loss at break. So with that being said, hopefully that's helpful to people. I hope everybody has a good weekend. I apologize I wasn't able to stream yesterday. Yeah, that's the markets in a nutshell right now, man. So with that being said, I will see you in the next stream, hopefully tomorrow. And everybody have a good weekend. We'll see where the weekly candle close comes in tomorrow, because we need to see. Actually, let's just cover that really quick before we sign off. Before we sign off, let's cover the weekly candle close. Where do we need to close? Let's turn this stuff. I mean, we're still in that 1 week kind of like bear flag, right? Where's my 1 week bear flag? I'm pretty sure I got it on here. I don't. In any case, you're looking at a bear flag, right? It's a horrible looking bear flag. I get it. But you get where I'm going with it, right? And again, don't get worried about this. Like, do not freak out about this. Like, this could take weeks to play out. And just as easily as this plays out, taking you down to $68,000, 70K, right? It could just as easily reverse because it did bounce off the 50 moving average. In my opinion, I mean, you just need to close this candle green. You really just need to close this candle green, which means we need to stay above 82.5 by tomorrow. That's it. That's all it really comes down to. On the daily chart, it's probably relatively the same, to be honest with you. Yeah, I mean, same thing on the daily. What you really need to see on the daily is today we need to close above $84,839, which is where that 200 moving average is. Because if we don't, it's not looking like good news for Bitcoin, at least in the short term, right? Until we find a temporary bottom, potentially at this previous all-time high at about 73.6. So watch those two levels, right? Watch those two levels. I think it was 82.5. We need to close that above that tomorrow. And then above, call it 84.8. So we need to get up to about $85,000 today or tomorrow to reclaim this 200 moving average, right? And the best bullish case scenario for Bitcoin is you close above 84.8 today, and then tomorrow you close above 85, and then that confirms that you are above the 200 moving average, right? So with that being said, I will see you all soon. Everybody have a good day. Peace.